What's going on, everyone? Welcome to this afternoon's webinar. I'm really excited about this. I'm really excited to have you here. For Raymond, who wrote in, it started at 4:15, not 4 o'clock, Raymond, but thank you for getting there early. I'm actually in Orlando right now, and I made my flight earlier because I was so excited about this event, and I wanted to make sure nothing got in my way. And I got tempted. I got on the plane, and I've never had this before on the plane. They said, the plane is overweight and we need people to leave. And they started upping the ante, and they got it so that, you could get $800 per person that you were flying with, plus the free first class ticket. It was this ridiculous offer, and I was like, no, I'd much rather introduce Marc Chaikin today. This event's going to be awesome. So it was a no-brainer, and I turned down the best offer I ever had on the plane. But you guys are in for a treat today. There's not many people, as you know, that I want to bring on as a guest and introduce to you, because, when you're referring someone else, it's like the most important thing there is, because your reputation's on the line too. But it's an easy thing to do with Marc. He's a 30-plus year industry expert, and I don't know if you know this, but there's a lot of the brokers are always competing with each other, right? Thinkorswim, Fidelity, they're all always going at it, best rates, trying to get the best customers, but they all have one thing in common. They all have Marc's indicators on their platforms, because he's a pioneer in the technical analysis and the indicators he's created, and the work he's done has helped so many traders achieve success. And for me, what makes this really special and really proud to do this introduction is, not only is he going to go through what's working right now, but there's also a new indicator that's fresh, that's hot, that's working right now, and he has not shared this with anyone. I said, so this is the first intro? He said, this is the first intro. So I love making the first intro. I love that I'm bringing you guys, all men and women, an exclusive, and I think you're going to really enjoy and benefit, as I will, from what Marc has to say. So I'm going to stay here. I'm going to be with you. I can't wait to hear this. I want to learn more about this indicator right now. So Marc, with that said, are you ready to show us everything right now?
I am ready to go, Adam, and I promise you're going to see some technical trading tools and fundamental tools that'll help you make a lot more than $800. So don't worry about missing the offer. And thanks again for staying with us, and for the whole Adam Mesh team for turning out such a big webinar attendance. So with that, today's webinar is all about trading options like an expert. We're going to show you some very specific techniques that I know can make you a successful options trader. A little bit about me. 50 years on Wall Street. Adam was being kind. I actually look like my picture, as does Adam. I can tell you that he looks as good in person as he does in that picture, because I was just up in New York at his office a couple of months ago. For 45 years, I've been using technical analysis in conjunction with fundamental analysis. And the reason is that when I got my Series 7 registration as a stockbroker, it was the day the bear market of 1966 ended. It was a 9-month bear market. And for the first 2.5 years of my career, every day was an uptick. And then I was with a research firm called Shearson Hamill at their main office at 14 Wall Street. Best analysts on the street. Everything they recommended went up. It was a bull market. Then 1969 came along. It was the first bear market I had ever lived through with clients' money, my responsibility. And that bear market lasted for 2 years. And I realized early on that if you didn't have something other than fundamental analysis, you were going to lose all your clients' monies in a bear market. So I started a 45-year research project in technical analysis, culminated with the creation of the Chaikin oscillator and Chaikin money flow. Many of you know me for that. As Adam said, it's on every online brokerage platform, Thinkorswim, Schwab, Fidelity. It's on Bloomberg and Reuters, and you can see it on stockcharts.com. Along the way, I headed up the options department at a regional firm called Tucker Anthony and R.L. Day. 20 offices, 250 brokers, tens of thousands of clients trading options. So I've got a lot of experience providing options analytics, but also seeing what options traders do well and what they do poorly. And that's going to be reflected in what I'm going to teach you on today's webinar. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues at Tucker Anthony. I was mentored by a guy named Stan Bearish, who was the first quantitative analyst. All the institutions listened to him. He taught me an awful lot. I'm grateful for the people who've mentored me. That's part of the reason that I started Chaikin Analytics, came out of retirement after the financial collapse of 2008 to give something back. It was my wife and I. We're now 25 people in Philadelphia dedicated to the success of our subscribers. And the fact that I was mentored by smart and successful institutional investors, some of whom were clients, as I said, some were colleagues, is important because it's reflected in my newest indicator, the Chaikin Power Gauge rating. It's a 20-factor quantitative model, 85% fundamental, that basically does the fundamental heavy lifting. I learned early on that institutional investors use fundamentals to make their decisions. A lot of traders, in fact, most traders, rely on technicals, price patterns, candlestick charts, money flow, volume, and so forth. If you're just looking at the technicals, you're not getting the big picture. And I'm going to show you how easy it is to know what the fundamental potential for a stock is by explaining the Chaikin Power Gauge rating to you. It's the culmination of my life's work. I'm very proud of it and happy to be sharing it on webinars like this. Now, in the 6 years that this Chaikin Power Gauge rating has been available to the public since January of 2011, we've been fortunate enough to get great reviews in the media, places like Barron's, Benzinga, on TV with CNBC, and now we've got a lot of our old institutional clients using the product. People like Paulson Hedge Fund, Soros Hedge Fund, Fidelity uses the product in their technical analysis department. And we've got people like Adam Mesh who've really bought into what we're doing, so they feel comfortable allowing us to share this with their audience. And then you've got traders like Simpler Trading and John Carter, and then macro people like John Malden, and you'll see a couple of endorsements. Try and keep the endorsements to a minimum, although we get them all the time. Now, in the next 45 minutes, I'm going to help you prepare yourself for 2017. We've been doing a webinar like this since the end of 2016. We've really helped people stay focused on the things they need to be focused on to make money as traders in 2017. So we're going to show you what to expect in 2017, how to find winning sectors, groups, and stocks. Very important to avoid the losers so that your drawdowns are small, and one of the best way to avoid the losers is to not go long stocks that have bearish potential. Then finally, woven in through the webinar, we're going to show you how to use options for leverage, income, and directional trades. Now, let's start out with something that is sort of whimsical but pretty serious. How many of you have been spooked by Donald Trump's tweets regarding the stock market? If you have, put a big T for Trump in the question box, please. And I see a lot of you have, and I'm here to tell you that you don't have to be spooked by these tweets. In fact, they're an opportunity. Here's an example. General Motors, back in late December, even before he was inaugurated, where that yellow arrow is, Donald Trump sent out a negative tweet on General Motors moving jobs to Mexico. He had a 1-hour reaction to the downside. The stock was oversold. It had a bullish power gauge rating. That's on the bottom of the chart. Obviously, we'll get into this as we go along. But it was a great buying opportunity. The stock rallied from 34.5 all the way up to 38. So don't be spooked by Donald Trump's tweets. View them as an opportunity, sort of the Warren Buffett approach. Be fearful when other people are greedy and greedy when other people are fearful. So if you see a Trump tweet on a stock you like, start looking for buying opportunities. If you're an options trader, look for call options or vertical call spreads. Now, something interesting happened on that rally, and I'm giving you an advanced preview of a secret that 95% of traders never see. It's a signal they never see. We've been teaching this to institutional investors for over 30 years. We call it a bearish money flow sell alert. So Chaikin money flow is on this chart, oscillates from red to green, looks back over 20 days, 21 days, and it measures institutional buying and selling. When a stock rallies, like General Motors did in November, December, you'd expect money flow to be green, indicating that institutions are accumulating the stock. However, there's a pattern that's right here on this chart. If you make a new high up near this upper volatility band, now we use Keltner channels. No, John Bollinger's a friend of mine. Don't use Bollinger Bands. These are intermediate term. If you make a new high up near that volatility band and Chaikin money flow has stayed in the red, that's telling you that smart money is selling into the rally. We call that a bearish money flow sell alert. You can find these opportunities over and over again. We're going to show you 6 of them in the course of the webinar. And this is the most powerful sell signal I know. Now, if you've read any of the Jack Schwager books, and how many of you have read the Market Wizard books? Put a W in the question box if you have. I know I've read all of them, and the reason is he details the methodology, the background, the trading habits of the most successful traders in the market going back over 20 years. And there's one common thread that runs through all these profiles: focus. Every successful trader or investor has a discipline. They follow it religiously. They know why they're using that discipline, and they're focused on that and nothing else. You lose your focus in trading and you're not going to be as profitable. So let's look at what I think you should be focusing on in 2017. First and foremost, the trend of corporate earnings. They're going up, and I'm going to show you a chart in a minute that you're going to really appreciate. Interest rates are really critical. They've been moving up, and the Fed told us just yesterday, Janet Yellen testifying before Congress, they're going to keep going up, but gradually. You want to focus on sector and group strength and weakness, because if you can find the best sectors, you'll be able, with the approaches that we're going to show you, to find the best stocks in those sectors. And so stock selection is going to be very important in 2017, and there's a good reason for that. In periods of rising interest rates, active portfolio managers at mutual funds do better than they do in periods of declining interest rates. So I'm calling 2017 the year of the stock picker, and we're going to show you how to pick stocks, give yourself what we call the directional edge, and then finding the options trades are easy, believe it or not, once you have the right stocks that you're looking at. So where should you be putting your money? I mean, even traders have longer term accounts. They're called IRAs or 401k plans, and a lot of the financial advisors tell you to have a portion of your money in bonds. Well, that's not the place to be in 2017. This is a chart of the TLT, the 20-year Treasury ETF. A lot of traders use this to make a bet on the bond market. And what we see here is that the ETF bond prices peaked in early July. And long before the election, they were headed lower, which means yields were going up. That trend accelerated after the Trump victory because the expectation was that his fiscal agenda with infrastructure build, rebuild the military, was going to create a bit of inflation with higher interest rates accompanying that. So the bond market has been cyclical through mid-December, and you've had 2 rallies now, a very minuscule retracement rally. It's not even a 382 retracement if you're a Fibonacci advocate. And this latest rally failed to exceed the previous peak, and now you're headed lower, as you can see today. Every chart we look at in this presentation is up through roughly 12 o'clock this afternoon. The bond market is just not the place to be. You're going to see a lot of people on CNBC saying, time to buy bonds. The Fed is telling you there's going to be 3 interest rate increases in 2017, so how can the bond market go up? So if bonds aren't the place to be, then it has to be stocks. Whether you're a trader, swing trader, options, or an investor, you've got to be exposed to equities. Now, a lot of people, and we know this because we take calls from our subscribers, have been perplexed at what to do because we've had 7 straight up days, 5 straight all-time highs in the S&P and the NASDAQ. And people are on the sidelines with money and not sure when to get in. So what we have here is a one-year chart of the SPY. Many of you trade this. It's the S&P 500 ETF. It's the most liquid trading vehicle in the U.S. markets. A couple of things to note. We've been in this trend channel since October, when we made that low before the election, actually early November. And with today's action, where we closed at another new high, we hit 2350 in the S&P 500, closed a tiny bit below that, I think 2348. We're actually exceeding that upper trend channel. So should you be cautious and looking for short sales? No. And here's the reason why. Here's Chaikin money flow. Starting with that February bottom in 2016, money flow has been very, very strong leading into the pre-election period. How do we know that? It's green, not red. And the reverse of the money flow sell signal is what we call a money flow buy, where you get oversold and money flow is green or positive. It's a fabulous buy signal. You can spot this on stockcharts.com. You don't have to be a Chaikin subscriber, or on your online brokerage platform. So where is money flow today with the market at new highs? Well, it's as strong as it was in the spring rally and the summer rally. So there's no indication that the institutions are pulling back or taking profits. Now, you are at the upper volatility band, so I'm going to give you an advanced look at one of our most powerful internal indicators. I know a lot of people look at the technicals, the McClellan oscillator, the summation index, advanced declines. We have a much different way of looking at the market internals, what are known as the breadth indicators. We have something we call the power bar, and that's what's on the upper portion of your screen. It's the number of stocks in any ETF, industry group, index, or list that you create within the Chaikin system that has bullish, neutral, and bearish stocks. So it's telling you what the potential of the stocks, in this case the SPY, is. And as of last night's close, there were 138 stocks in the S&P 500 with bullish power gauge ratings and only 75 with bearish ratings. That number improved today. That is the best reading of the rally that began 2 days before the presidential election. The reason that's important is it says that there are a lot of bullish stocks with bullish potential in the S&P 500. Same is true for the Russell 2000, IWM, and the NASDAQ triple Qs. So we want to be long the market, but we want to be smart about it. You don't want to buy breakouts, although I do think the market can go to 2450 to 2500. We've been saying this in our weekly market letter for the last 4 months, and still maintain that 2017 is going to be a bullish year for the market. Now, if you trade index options on the SPY, I would encourage you to look for a bullish strategy. And we have a module called Options Play that we've integrated into Chaikin Analytics. We didn't build it, we licensed it because it's the best thing I've ever seen for quickly finding options ideas. And we're going to show you various ideas that came out of Options Play today. But if you were bullish on the S&P earlier today, you could have bought the SPY itself. That's a $23,000 investment for 100 shares. You could have bought a call option, in this case with a March 31st expiration, 233 strike price, slightly in the money, or you could have bought a vertical call spread. Options Play does the heavy lifting in the same way the power gauge rating does it for fundamentals. They look at the probabilities, the implied volatility, everything that professional traders look at, and they determine that the vertical call spread, buying the 233 and selling the 241 against it, had the best risk-reward ratio. But with the market at that upper volatility band, do you really want to bet that we're going to keep going right to 2410 by the end of March? I'd rather put on a spread like this on a pullback, 1.5 to 3 days. If you're looking for a 5% pullback, you're looking at the wrong market, in my view. When people are leaning the wrong way, when there's cash on the sidelines, when they're not 100% committed to a rally, the pullbacks are narrow. That's what we've been saying since the election, since Trump got inaugurated. Now, on the left is the Options Play suggested strategies if you're bearish. So they're assuming a 4% decline by March 31st, and their recommended strategy is, if you are that bearish, is the 234, 226 put vertical spread. Much higher probability than buying the put outright, better risk-reward ratio. I would encourage you to stay on the long side, but a lot of people want to protect their portfolios, and a put spread like this is a nice way to protect yourself, in this case, against a 4% decline in the market. Now, here's the likely scenario for 2017. This is courtesy of Bank of America Merrill Lynch Global Strategy. We're going to go back to the beginning of the bull market. Market bottomed out in March of 2009. The Fed stepped in and dropped interest rates and started stimulating the economy. So for 5 years, we were in the most bullish scenario. Falling interest rates and rising earnings. And earnings were rising because they were being compared to the terrible earnings that came out of the financial crisis. And then in 2015, we entered a bearish scenario of falling interest rates and falling earnings. In fact, we had 6 quarters in a row of year-over-year earnings declines. It's called an earnings recession. And because of that, there are a lot of people on CNBC who are telling you, oh, we're going to have a bear market, earnings are dropping, we've had 4 quarters in a row, 5 quarters in a row, 6 quarters in a row. We didn't have a bear market in the S&P thanks to the FANG stocks. The S&P was actually up a fraction of 1%, but in the small cap stocks, we did have a bear market. In the Russell 2000, the average very bearish stock in the Chaikin methodology down 18%. So that's not a good environment for stock prices, but then we moved into 2016. And we're in 2017 with the same bullish scenario, rising interest rates and rising earnings. The earnings recession ended in the 3rd quarter of 2016. It was the first quarter in 7 quarters where you had year-over-year earnings gains. We're just now finishing earnings season. It ends next week when Walmart reports. And the 4th quarter of 2016 again showed year-over-year positive earnings comparisons. And we expect that to continue in 2017, especially if parts of the Trump agenda like rolling back regulations and tax cuts come to pass. The rolling back of the regulations is happening already. So 2017 is a year where we expect higher interest rates. The Fed's told us that. Don't have to be an economist to know it. And rising earnings. It's a bullish scenario. And there's one thing you should know about periods of rising interest rates. This chart is based on 50 years of market history. During periods of rising interest rates, 5 sectors have year in and year out outperformed the market. Financials, industrials, technology, energy, and materials do well in periods of rising interest rates. 4 sectors do poorly: utilities, telecom, consumer staples, and healthcare. And there's a theme here. These 4 sectors that do poorly are called defensive sectors. They're where money goes when people are nervous. They typically have higher yields. So when interest rates start going up, people shift out of high yield stocks into more aggressive cyclical stocks. And then consumer discretionary is the outlier. Now let's see what actually happened in the 3 months since the election. This is our sector performance analysis tool, and looking at the 10 select spider sector ETFs and looking at their price performance over the last 3 months. And lo and behold, the top 3 performers, financials, technology, and materials, are right there in the bottom left, just where they should be. And the bottom 5, with energy being the outlier, are the sectors that perform least well in a rising interest rate environment: healthcare, real estate, consumer staples, and utilities. And later in the webinar, we're going to look at financials, consumer staples, and then the semiconductor segment of the technology sector. And now here we have our power bar. I showed it to you on the S&P 500, the spider. In the financial sector, 41 stocks have bullish power gauge ratings. Only 1 has a bearish rating. That's where you should have been looking. This has been the case for 6 months, since October. That's where you should have been looking for call buying opportunities or swing trading opportunities over the last 6 months, and we're going to show you how to identify them. But we're talking about a lot of work. If you're doing this all yourself, if you're going to Yahoo Finance, FinViz, Google Finance, listening to CNBC, you're taking a lot of time out of your day. And in spite of the big debate about gold stocks and whether or not they're going to be a good investment here in the Trump presidency, our precious commodity, our most precious commodity is time. We just don't have enough of it. In our personal lives, Twitter, Facebook, Snapchat, email, LinkedIn, you name it, Facebook, all distractions that take up our time as well as what we look at in the financial space. There's just too much information coming at us. I call it a flood of information. It's information overload, and it can inundate you. So if the problem is information overload, our solution is Chaikin Analytics. It enables you to make more money in less time, and let's start looking at how you can do that. First of all, we integrate options play. So once you've found the right stocks in the right sectors, you can find those option strategies simply and easily. The key point of this webinar is that to trade options like a pro, to trade options profitably, you need what I call a directional edge. When I ran the options department of Tucker Anthony, sad to say 95% of the traders, in spite of my good efforts to give them ideas and teach them, lost money. And the reason is they didn't understand the importance of a directional edge. They were making wild bets on out-of-the-money options with short time to expiration. That's a loser's game. But what I try to show them was that if you had a directional edge, and back then all I had was technical analysis to give them that, now we combine fundamentals with technicals into a 20-factor quantitative model, and then we give you Chaikin buy and sell signals to better time your exits and entries. So the real key to profitable options trading is focus and a directional edge. Now, we're not really in a volatile market now. You may read that there's a lot of volatility going on. The first 2 months of this year have been the least volatile first 2 months in 20 years. But we'll get to a time when there are volatility spikes. The VIX is very low for those of you who follow it. But whether you're in a volatile market or a market that's just going straight up for 7 days in a row, you need a disciplined methodology. This is what Jack Schwager was talking about in his Market Wizards book. So this pyramid encapsulates our Chaikin methodology. At the top of the pyramid, the power gauge rating. Its output is a simple gauge, just like the gas gauge on your car. And then sector and industry group ranks. Very important. At the bottom of the pyramid, just 2 technical indicators. We're trying to solve the information overload problem, not add to it. So Chaikin money flow, which you've already seen, and Chaikin relative strength, our unique visual view on how a stock is doing relative to the market. And then right in the middle, that sweet spot, Chaikin buy and sell signals. So the power gauge rating looks deceptively simple. It fluctuates from very bearish, which would be as if your gas gauge was on empty, to very bullish, which means your gas gauge is full and therefore you can travel a long way. It's a simple indicator, but it's very powerful. What I like to say is that the Chaikin power gauge rating is like a Chevrolet with a Ferrari engine under the hood, because there's a lot of number crunching going on to create the rating every night. And it can be your GPS during earnings season. Now, we don't have an earnings segment to today's webinar. I will point out to you that one of the stocks that Chaikin's been bullish on is a company called Bunge, BG, reported a positive earnings surprise this morning, up 10%. Right after the close, TripAdvisor, which has a bearish Chaikin power gauge rating and has for the last year, reported yet another quarter of disappointing earnings. And as I'm looking at the tape, it's down 4%. So the power gauge rating can be your GPS during earnings season. Now, John Carter of Simpler Trading, who's one of the best pure traders that I've ever met, although Adam gives him a run for his money, looked at the Chaikin power gauge rating.
Thanks, Mark.
I know you do, because I've listened to your webinars to our people. So I believe in you as well. But John Carter said, this is an objective, awesome meter for stocks. There are a lot of hyped up tools there, but when I find something interesting, I'll let you know about it. So you can imagine that a single tool that combines 20 plus technical and fundamental factors to anticipate a stock's potential got my attention. It's called the Chaikin Power Gauge Rating, and at first glance I thought this looked like an objective awesome meter for stocks. So what are those 20 factors that got John so excited? We're very transparent. This is on our website. You can go there whether you're a subscriber or a guest. In a one-year research project that ended in September of 2010, based on everything I had learned from colleagues and clients in the institutional space on how they made decisions, I distilled 200 factors down to 20, grouped them into 4 components so you could make some sense out of them. Financial metrics are the value metrics that a Warren Buffett would look at. 35% of the model. They're the bedrock of the model. They don't change very much. And the 2 most important ones are price to sales ratio, which means you're not paying too much for a dollar of revenue. Some examples of that right now are Tesla, which is enjoying a pretty nice momentum surge. But if you go back over the last 5 years, the fracking stocks, 3D printing stocks, cloud computing stocks, you paid an awful lot for a dollar of revenue. And what happens is that works well when the stock's going up and everybody's in love with it. Momentum investors, the greater fool theory, whatever you want to call it. But as soon as there's a glitch, you're on a high wire without a safety net. That's why it's so important. And then free cash flow. This is probably the simplest concept, but the one that's least understood that underlies Warren Buffett's success. You can fudge earnings with accounting techniques. You can't manipulate cash flow. You either generated cash in a given year or you didn't. So free cash flow analysis is very important. Earnings, important, particularly earnings surprise. We pointed out 2 earnings surprises just now that happened today. And this is what I learned from George Douglas at Drexel Burnham, who built the first quantitative database on Wall Street in the early 1980s and is still managing quantitative money out in Santa Monica today. When a company beats estimates, it's called a positive earnings surprise. When they disappoint, it's called a negative earnings surprise. And what George taught me was that when a company reports a positive earnings surprise like Bunge did today, it causes analysts to raise their estimates. And analyst estimate revisions are the single biggest short-term driver of stock price movement. So you've got financial metrics, which are the bedrock, but then you've got more sensitive indicators. And in today's webinar, we're going to focus on earnings surprises and industry group and sector strength. And these are all factors in the model. Technicals are only 15% of the model, even though that's what I made my name creating. This is your fundamental go-to indicator. Now, here's the performance of the Power Gauge rating in 2016 using the Russell 3000 as our universe. The average very bullish stock, and this is 418 of them at any given point in time, were up an average of 32% in 2016. Now, I know a lot of you are probably thinking, boy, I'd be thrilled in my stock account in my IRA if I was up 32%. Leverage that 32% with options, and you're talking multiples. The average very bearish stock was up only 9.5%, less than the Russell 3000 index and less than the average stock in the Russell, which was up 24%. So the whole point of this webinar is to get an edge, you want to focus on the very bullish stocks for your long trades and avoid the very bearish, and you want to look to the very bearish stocks for your put trades. It's a really simple and powerful methodology. It's what the hedge fund people use every day. They find their best stocks and then they short the worst ones against it. And you can do that as well. Now, final proof point before we get to very specific examples, we have 2 partnerships. One with NASDAQ, where we've created 3 NASDAQ Chaikin indices. Started on April 1st of 2014. They actually get rebalanced just once a year, so we can't trade around the positions in them. We've taken the NASDAQ large cap, small cap, and dividend achievers and reduced it down to the best of the best with 2 rules plus the Chaikin Power Gauge rating. All 3 of these indices have significantly outperformed their benchmarks coming up to their 3rd anniversary on April 1st. The goal was to encourage an ETF creator to license the indexes and launch an ETF, and that is about to happen. So we're very pleased. And then with First Trust portfolios, there's $50 million in unit investment trusts being managed under a very disciplined Chaikin methodology. There are 5 series. There's a new one coming out next week. So the importance here is that major financial institutions have tested, stress tested, and validated the Chaikin Power Gauge rating. So that what you're going to see in these next 20 slides is really not cherry picking. It's what's been working for 3 years and for the last year and a half with real money, $50 million. So let's start with a quote from Warren Buffett. I call this the ideal setup. Warren Buffett has said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. He calls it the fat pitch. I call it the ideal setup. And our name for the ideal setup on the buy side is Classic Chaikin Bulls. Power gauge rating is bullish, which means that the fundamental potential for the stock is strong based on those 20 factors. The stock is outperforming the market. I can't overemphasize the importance of having any fundamental discipline, whether it's quantitative or earnings driven or conventional, be validated by the market. My old friend Marty Zweig, who sadly passed on too young, gave the best advice you could ever get in one of his books. He said to make money on Wall Street, you need to do 2 things. Watch the Fed and listen to the market. And in options trading, listening to the market means knowing whether the stock is outperforming or underperforming the market. If you're on the long side, you want to be in stocks that are outperforming the market. You're putting the odds in your favor. That's another way that you get that directional edge. And then the third piece is Chaikin money flow being strong, because you want the institutions to be buying the stock. So our poster child for a classic Chaikin bull for the last year or so has been United Health, second largest healthcare provider in America. Even when the healthcare stocks have been doing poorly, United Health has been making new highs. So let's look at this 1-year chart. At the bottom is the power gauge rating. Output as a ribbon goes from red to yellow to green. United Health has had a bullish power gauge rating for over 15 months with a small period of neutral here. It's been outperforming the market, which is the indicator above it. That's our proprietary relative strength indicator. How is the stock doing relative to the SPY? Now, except for that period before the election, United Health has been significantly outperforming the market. And then you've got Chaikin money flow. And look at the accumulation that was going on in the 120, 125 area on the way to 165. And there's still accumulation going on today. And then I show you our earnings indicators, because I mentioned that earnings surprise drives the market. We have an earnings alert indicator. We tell you the next earnings report, which is April 18th, because they just reported on January. And our earnings alert indicator is bullish. It's a green exclamation point telling you that you should expect yet another positive earnings surprise. And remember what we said, earnings surprises cause Wall Street analysts to raise their estimates. Sometimes stocks spike right after a positive earnings report, and you've got to wait for a buy point. You don't want to chase those spikes, but when they come at a low point, as they did in January, great buying opportunity. Now, our poster child for a bearish stock, we call them Chaikin Classic Bears. Relative strength is weak, the power gauge is weak, and Chaikin money flow is red, not green, indicating that institutions are selling the stock. Now, Chipotle has been our poster child for Classic Chaikin Bear for over a year now. Why? Because the power gauge rating turned bearish off the charts about 15 or 17 months ago, with Chipotle trading at 690. On the way down to 380. And it stayed bearish until early January, when some of the value metrics started becoming more bullish. But it's been underperforming the market the whole way. It's a stock you don't want to be bottom fishing in. And look at Chaikin money flow. Tell me whether you think the institutions are actually accumulating this stock or selling it. Type a big Y if you think they're accumulating it, and an N if you think they're selling it. And I see that a lot of you have already gotten the message. When money flow is red and the stock is rallying, the institutions are not buying. There are bottom fishers in the market, short covering and so forth. And along the way, we've had one of those 6 pairs of buy and sell signals that we talked about. In this case, our overbought sell. Really simple pattern. I learned this from Larry Williams, another one of my sort of mentors, did the original work on accumulation and distribution. Stock with a bearish power gauge rating makes a new 8-day high as it gets overbought. It's a really simple pattern. It works 2 out of 3 times. It lasts for 5 to 10 trading days. It's a great options entry technique. And now we're heading up to another sort of rally peak, and money flow is negative. So you may want to still think about buying a put option. Now, Chipotle was trading at 390 as recently as 7 days ago, and it's rallied up to 424 today. So I went into options play to see if there was a highly rated put strategy. And sure enough, that vertical put spread, buying the 425, selling the 390 with a March 31st expiration, gets a 116 ranking with a check. Finding options trades can be that simple if you know what stocks to look at. And that would be almost a 200% return if Chipotle trades back down to where it was just 7 days ago. Now, I'm not telling you that's going to happen. These aren't recommendations. We're not registered with any state or federal agencies, so this is really for educational purposes. But follow these stocks, see how they look in the work that you do or how Adam thinks about them, and then, if it's appropriate, put on the right strategy. Now, we help you find these bullish and bearish stocks with our list manager that incorporates Chaikin hot lists. I've just shown an example of that on the screen because, again, there's a lot of stocks that we cover, 5,000 of them, U.S. equities and ADRs. So we have lists of all bullish stocks, stocks that turn bullish this week, and so forth. Make it simple to find the right names. Now, we've been looking at relative strength and money flow, and we've actually, and Chaikin power gauge rating, we've given that a name. Because what we're all about is combining fundamentals with technicals, as I said in that slide on the directional edge, which means looking at the power gauge rating for the fundamentals and relative strength for the technicals. And we call that combination the dynamic duo when they agree with one another. And it really finds big winners and losers. So here's an example. A company called Quanta Services, symbol PWR, because they make equipment for the power generating industry. Obviously, if Trump's infrastructure proposals get passed in Congress and appropriations come in, people are going to be building more power plants. There's going to be more manufacturing. So here's your dynamic duo. Power gauge is bullish. That's at the bottom. And relative strength turned positive in April. The stock was trading at 24 on the way to 38. So when the market was going sideways, now it's going higher. Quanta's been a big winner, heavy accumulation, relative strength buy signals. I'll explain that to you in a minute. Very simple signal, but very powerful. These signals last 4 to 8 weeks. In fact, I'll explain it to you now. It's based not on the power gauge, but whether a stock is outperforming or underperforming the market. In this case, Quanta's been outperforming the market. How do we know that? Our relative strength indicator is green, not red. Now, you could go to Investors Business Daily and see a number from 1 to 99. To me, numbers contribute to information overload. I like pictures, and I like colored pictures. So if the relative strength indicator, which looks back over 6 months, is green, means the stock is outperforming the market. So what is a relative strength buy signal? If the stock is outperforming the market and it trades under its 21-day average and then rises back above it, we call that a relative strength buy signal. The stock has corrected and then started to move back up. And these are incredibly good swing trading entry signals. They tend to last 4 to 8 weeks, so you can buy an option with more time and not put yourself under the gun of near-term expirations. You can buy an out-of-the-money call with a little more confidence, or maybe even buy an in-the-money call as a way to leverage your capital. Very powerful signal. So there's your dynamic duo. Now, we've talked about something called a personality change on this chart. We'll show you what that is, and then another concept, stealth accumulation. These are the 3 things I want you to take away. This is how you get that directional edge. Now here's an example of a stock where the dynamic duo has been bearish since May. Power gauge rating on Coca-Cola has been bearish. It's been underperforming the market since May. The stock was about 45. Money has come out of it along the way, and the stock has been basically a dog. Well-known brand, earnings have been better than expected. The market doesn't care. Analysts think this is a mismanaged company. It's in that consumer staples sector that does poorly in a rising interest rate environment. And then I want you to take note of this yellow zigzag here about a month ago when the stock was 41. Because on that day, Goldman Sachs downgraded both Coke and Procter & Gamble to sell signals a month ago. If you were following a discipline like the power gauge and our dynamic duo, you would have been out of this stock looking for shorting opportunities way back in May. So you can do better than Goldman Sachs or Barron's or Merrill Lynch if you follow a discipline that works. It's proven itself day in and day out. Now, the second concept is spotting what we call personality changes. As a trader, you need to know whether a stock is outperforming or underperforming the market. So we define a personality change as a stock that's gone from underperforming the market to outperforming the market. The indicator's gone from red to green. Bearish stock, bearish personality change, just the opposite. Because as a trader, you don't want to be on the wrong side of the market and be on the wrong side of the door when Jack Nicholson is coming through with the axe. So here's an example of a stock in the very strong financial sector, Citizens Financial Group, CFG. Power gauge has been bullish since April, but the stock was in a sideways bottoming pattern. In July, the stock broke out and started outperforming the market with heavy institutional accumulation. And what I look for is the first buy signal after we've had that bullish personality change. And that came in September at about 24. The stock traded at 38 today. And there was just a buy signal here at 34 again ahead of the last earnings report. Now I want you to keep this pattern in mind because it's based on the way markets have behaved for 100 years. 94 years ago, Richard Wyckoff, who was the best technician of his era, formulated an idealized way that stocks move up and down. You form in a base and accumulation phase, and then you break out, and then you have periodic pullbacks along the way. Notice how similar the breakout from the accumulation phase is to the change in price action when the stock starts outperforming the market. The reason I'm so confident in doing these webinars, and I think you'll agree that I really believe in this with a passion, is that it's based on human nature. It's based on the way markets have behaved for 100 years. This isn't new cloud computing, big data stuff. This is just the way the market works. That's why the power gauge works, because it's based on how the market works. And relative strength is a great way to find those patterns that Wyckoff theorized almost 100 years ago. Now on the downside, you had a bearish personality change in Under Armour back here in May. Power gauge rating's been bearish on Under Armour for well over a year and a half. And look at what the institutional selling has been like as the stock was going sideways to up here in August, September, and October. Somebody knew something. So you had the dynamic duo weak. That means the power gauge and relative strength were red. The market is agreeing with the model. Marty Zweig would be smiling down on us. And you've got these sell signals here, relative strength sell signals right ahead of this earnings report just 2 weeks ago, which disappointed yet again, and the stock dropped 28%. So that's why I said the power gauge rating can be your GPS during earnings season. This is a stock you should have avoided. It's a well-hyped stock. Institutions are slow to change, but they've been selling the stock. And then look at the Wyckoff pattern. How similar is that to the breakdown and the periodic rallies, which give you an opportunity to buy put options or get out of the stock if you've been stubborn and you've overstayed your welcome. Now here is the classic proof that Chaikin Power Gauge rating can keep you out of trouble, protect your capital, and give you opportunities on the short side. SunEdison in 2015 and 16 was the darling of the solar energy sector. Hedge funds were accumulating it. Merrill Lynch had a buy recommendation on it in the 28 to 30 area. It made new highs at 30 with negative money flow. And then the power gauge turned bearish in July with the stock at about 26. It started underperforming the market. Merrill stayed bullish on it. You had a series of negative earnings surprises. This company was leveraged like Enron was, and the power gauge picked that up. And look at the institutional selling all the way down from $30. Never wavered. Institutions knew what was going on, and they just couldn't wait to get out of the stock. Now, this chart ends in April of 2016, and the reason is that SunEdison filed for bankruptcy. I captured this screen grab from CNBC. Merrill Lynch put out a sell recommendation on it in February at $3, down from 30. And we were at an options trade show in California last May. I was demoing the product in our booth, and an advisor came by and he said, "Wait a minute, let me take a closer look at that chart." And he said, "Oh my God, I'm with Merrill Lynch." Turns out he was from Philadelphia. And I bought SunEdison on the way down at 15 for my clients and myself because Merrill Lynch was still recommending it. If I'd been using Chaikin, I would have saved a lot of pain and money. And Edward M., thank you for that testimonial. If you avoid the bearish stocks, if you use them as short sale candidates, put candidates, you're putting the odds in your favor. Now, the third concept that I want to have you take away from this webinar is what we call monitoring stealth buying and selling with Chaikin money flow. We've already seen some examples of it, and then we're going to zero in on that trade that 95% of traders never see. So here's a stock, Senta Garden and Pet, that's had a big run. It's gone from 14 to 32. It's a small cap name based in Florida, not widely followed, but someone was bullish on the stock because look at this Chaikin money flow as it broke out from the base, as you got a bullish personality change with the power gauge bullish. Someone was accumulating that. We call this stealth accumulation. The reason is even when the stock pulled back 5 to 15%, the money flow stayed bullish. Smart money was not contributing to the decline, it was taking advantage of it. And then these relative strength buy signals worked out quite well, including one just recently. But here's the secret signal that we've been teaching institutional investors for over 30 years. We call it the bearish money flow sell alert. And we've already seen 2 examples of it. Stock makes a new high near the upper volatility band, and instead of going green like it did all along in this big rally phase, money flow is red. What does that tell you? It tells you that institutions, smart money, are liquidating their holdings, taking profits under the cover of strength in the stock. In this case, SunTrust, a very fine bank down in Florida, recommended the stock, has been recommending it. So the public was buying it and smart money was selling it. And if you sold it up there at 32, you're very happy because with all this volatility around the last earnings report, it hasn't gone anywhere, even as the market's made new highs. So 2 key concepts. Stealth accumulation helps you find stocks to buy, and the bearish money flow sell alert is the only technique I know that gives you an opportunity to sell a stock at a new high and not feel as if you're going to leave a lot of money on the table. Now, we've looked at a couple of the sell signals and buy signals, 6 pairs in Chaikin Analytics filtered by either the power gauge or relative strength. Again, that's your directional edge. And then the technical patterns have to kick in. We document all 12 of these signals on our website, chaikinanalytics.com, for anybody to see. Now here's an example of why you need to follow the signals. Another healthcare stock that's been outperforming the market while the healthcare sector has been weak. WellCare Health, WCG, It doesn't get any better than this. I probably should have used this for my classic Chaikin bull. Power gauge rating has been bullish for over 15 months. Stock's been outperforming the market. In the last year, it's gone from 90 to 150. Positive earnings surprises. That's why earnings surprises are part of the model. Now, it spiked up on the last one. Those spikes are a great spot to sell the stock. Take advantage of other people's greed. Be fearful. Take your profits. The next earnings report is due out on May 2nd, and our earnings alert indicator is bullish, so you should expect yet another positive earnings surprise. So in May or late April, you're looking to position yourself in a low-risk call option ahead of that earnings report, assuming the power gauge stays bullish. Now, how do you find these signals? It's great to know that they're there, but we have dashboard alerts in Chaikin Analytics. So I follow a list of 150 stocks, far too many for the average trader. You should follow 15 to 20 stocks and get to know them really well with whatever indicators or patterns you look for. But in this case, to prepare for the webinar, I clicked on this signal bell and I saw all the buy signals that had triggered based on last night's close in the 150 stocks I follow. And right at the top of the list was an oversold buy on Lam Research. Now, we've been talking about Lam Research in webinars for over 6 months now, so I was immediately attracted to that. I clicked on that and pulled up the chart, and I saw the oversold buy signal, which means a new 8-day low with the power gauge bullish and the stock oversold. And then I see that the 3 previous signals had been bullish as well, and there have been positive earnings surprises. So if I want to put on an options trade in Lam Research to take advantage of that buy signal, I go right to options play by clicking on it at the top of the screen. There it is. And options play is suggesting that the best bullish strategy of the 3, buying the stock, buying a call, is the vertical put spread. Buy the 115, a vertical call spread rather. Buy the March 17th expiration 115 call, sell the 120 against it. That was slightly in the money. If the stock rallies from 116 to 120, which is 3%, you'll make 156% on your money in a little more than a month. And that's, by the way, where the upper volatility band is. So a real opportunity to go from a signal to a chart to an option strategy. Seamless. That's why I said in the beginning that Chaikin Analytics helps you make more money in less time. Time is precious. Now, sector strength and group strength are really important. Investors Business Daily, Zacks, Standard & Poor's have all published white papers over the last 20 years documenting that if you are long stocks in strong sectors and industry groups, and they measure that with price performance, we measure it with the power bar based on the fundamentals, you've got a tailwind. It's easier to make money on the long side in strong industry groups and sectors. On the other hand, if you're consistently bottom fishing in weak sectors and industry groups, you're creating headwinds for yourself, which make it very difficult to make money on the long side, but these are great short opportunities. So let's go back to that sector performance chart. We rank sectors based on the power bar. Price performance of financials, technology has been fabulous. Consumer staples less so over the last 3 months. So this is the way we rank the 10 select spider sector ETFs. These are the large cap S&P 500 divided up into 10 sectors. Right at the top of the heap, as we mentioned earlier, financial sector. 41 bullish stocks, only 1 bearish stock. These are the large cap stocks. Technology, 22 bullish, 6 bearish. And then down at the bottom, consumer staples, only 2 bullish and 6 bearish. So let's look at the financial sector. This is the XLF. I know a lot of you trade select spider sector ETFs to make a sector bet. So if you do, actually type a big E for ETF in the question box. I want to see how many of you actually trade these instruments. What we're proposing is you find the best sectors, but instead of buying the XLF and getting some bearish and some neutral stocks in there, you find the best stocks in the sector, in the best sector, and that's where you put on your call trades or you do your swing trading. So I see a lot of you trade these. and we have our relative strength indicator that shows that the financial sector had a bullish personality change back in August. And interestingly, that was when interest rates started to go up, which helps the financial sector. So it all made sense. And it was outperforming the market even before the presidential election. Now, on the left nav bar, you see the bullish stocks based on the Chaikin power gauge rating in the XLF. And we're going to look at two of them, JP Morgan and Goldman Sachs. And the reason, and you see Citizens Financial, which we use as our poster child for bullish personality change. Every example in this webinar is a stock that I've recommended in my weekly market insights over the last 6 months. So we're not cherry picking them. We recommend one stock a week. We talk about some trends that you'll see in a minute. These are all stocks that we've lived and breathed with our clients every week, every day. So here's JP Morgan. Had a buy signal back in September. This is the oversold buy. Ahead of a bullish earnings report, there have been 4 in a row, actually 6 in a row. It was outperforming the market ahead of the election. The money flow was strong. Power gauge was bullish, outperforming the market. It's your ideal setup. It's Warren Buffett's fat pitch. And then when Trump got elected, the stock exploded. Jamie Dimon said, I can work with him. This is going to be great for the economy. It's going to be good for lending, and we're comfortable with Trump in the White House. So you got this huge rally up to about 86, and then you got a pullback and an oversold buy signal. If you're following the discipline, look at this is your stealth accumulation. You dropped, got oversold, but money flow stayed positive. You want to follow that buy signal just as you could have back here in September. Put on a call spread and watch the stock go to new highs. Actually closed at 90.08 today. You could have put on that trade at about 82 and a half on the way to 90 in 3 weeks. I said these signals have 5 to 10 days of optimal. In this case, it's stretched out to 3 weeks. Now, Goldman Sachs, very similar pattern, except the power gauge had been bearish back in the spring as the stock was making new 52-week lows. But then things reversed. You had a bullish personality change in August. The power gauge was briefly bullish. And then you broke out of that base. Remember the Wyckoff chart. Power gauge went bullish again in late September. Stock was about 160. We recommended it our weekly market insights at 170. And the stock hit 250 today. Notice how it was outperforming the market before the election, actually broke out to a new high before the Trump victory. Is it a coincidence that 3 Goldman Sachs executives are now high up in the Trump administration? I don't think so. And you got a series of oversold buy signals. The last one came here just 10 days ago with the stock at about 226 on the way to 250. Imagine what a call option trade or a vertical call spread would yield on a 10% move in a stock like Goldman Sachs. That's what you can do with a disciplined methodology. Now, every day since the Trump election, because the financial sector has been so strong, I've been using our screener to look at 4 industry groups that make up the financial sector. Major banks, banks and thrifts, that's CFG, insurance stocks, and brokerage and money management stocks. So every day I'm looking for ideas, and I ran the screen religiously, and yesterday I saw this and the same thing happened today. I took the brokerage and investment management stocks, there are 87 of them, required that the power gauge rating be very bullish and that money flow and relative strength be strong, and I narrowed those 87 stocks down to just 11 names, and I can loop through them in the charting program in 30 seconds. One of those 11 names for the last 5 days has been Fortress Investments, FIG. It's a big hedge fund based out of London. Well, Fortress hit it big because they got a takeover bid from SoftBank today, and the stock gapped up 29% on the opening, making a new 52-week high. We had a buy signal in Chaikin Analytics. In this case, it's a reversal buy. when a stock gets oversold and then goes back up through a short-term moving average. And that buy signal came with the stock at 510 just 2 weeks ago, and then you get a little bit lucky. Thomas Jefferson said probably the smartest thing I've ever read. He said, the better prepared we are, the luckier we get. So if you follow a discipline, whether it's the Chaikin discipline, the O'Neill discipline, what Adam Mesh preaches, follow a discipline religiously and occasionally you get lucky. Now, the last part of the segment is about playing good defense. We're actually going to end with this introduction of this brand new, exciting technology to find ideas. Now, good defense is important because it keeps you out of trouble, and it also can lead to great offense, meaning profits. So the XLP is the consumer staples ETF. It's had a retracement rally of about 50%. So it's probably going to run into resistance here, but it had a bearish personality change in July when interest rates bottomed out and bond prices peaked and started going down, and it basically mirrored the bond market. And here are the bearish stocks in the consumer staples. We've already looked at Coca-Cola. Monster Beverage is something we're going to look at now. A lot of the cosmetic stocks like Colgate and Coty's have had negative earnings surprises. So here's Monster Beverage. Power gauge turned bearish in August. Stock had a bearish personality change as it broke down. Remember, Wyckoff at about 48. You've had some sell signals where you could put on put options, and now you've just had a rally with negative money flow. So my instinct is, and I hope yours by now, let's look for a put trade. So I went into options play, and guess what? It couldn't find a high probability put trade. Basically said, if you want to play Monster to the downside, you've got to short the stock based on probabilities. This to me is a gold mine because it's so disciplined that even though you're dying to buy a put option or put on a vertical put spread, it can't find a good one for you, so you pass on it. There are other bearish plays that have come up. Now the final thing I want to emphasize, keys on that bearish money flow alert. One of the best things you can do to trade like the pros in the options market is to sell into strength, particularly when you have an edge. So you want to take profits with that edge, sell into strength, and the Chaikin money flow sell alert is the best way I know to do that. We'd all like to throw the long ball and hit home runs, but sometimes you got to be content to do what the market's telling you and take your profits. And here are a couple of examples. In my weekly market insights, comes out on Sunday, January 29th, 2 weeks ago. Usually I have a bullish or bearish stock of the week, and they've been financial stocks almost exclusively since October, with a couple of tech stocks thrown in. My recommendation was to take profits in 5 semiconductor stocks with bearish Chaikin money flow. AMAT, Synaptics, Cirrus Logic, Micron, and Intel. AMAT actually reported after the close today and disappointed, trading a bit lower. But let's see how those 5 stocks have done. Now, those of you who follow the market and tech stocks know that semiconductors have actually been making new highs. This is the XSD, the Spider Semiconductor ETF. Relative strength has been strong, so it took a lot of guts to go out and print to over 3,500 subscribers and say, sell these 5 semiconductor stocks, because the index has continued on to new highs, and Micron still has a bullish rating. Cirrus is neutral. Let's see how 3 of these stocks did. Here's Cirrus Logic. Power gauge had been bullish, been outperforming the market. There was plenty of negative money flow heading into the last earnings report in January. And based on this pattern of the bearish money flow alert, I said sell Cirrus, and the price was $60. They reported a positive earnings surprise. The stock gapped up, and then a negative response to it, and it gapped down. And Cirrus has dropped from 60 all the way to 53. Micron, which had been a fabulous stock, still has a bullish rating. Gave that bearish money flow alert. The stock was 24. Worked its way a tiny bit higher, but look where it is today, 22.91, down almost 1% earlier today with the market making new highs and semiconductors going up. This pattern works. And then finally, the granddad of the industry, Intel, bearish money flow sell alert. The stock was 38 and it's gone straight down, traded as low as 34.70. So the discipline works. And we're in print with these every week, tweet on it every day. So now to end the webinar, the innovation that I'm most proud of in this Chaikin Analytics venture, which is now 7 years in, is what we call our stock discovery engine. Now, we looked at Under Armour earlier. It's an apparel stock with a bearish rating. So you can do two things with the stock discovery engine. You can find a stock to swap out of by entering the symbol UAA, the new symbol for Under Armour. You get two slices that I'm featuring. There are more, but I'm just featuring these two. Stocks like Under Armour, which means apparel stocks, mid-cap, bearish earnings. And we're showing you 5 stocks here from the stock discovery engine, like Under Armour, apparel stocks with bearish power gauge ratings. You may want to look for them as put buying opportunities. You want to avoid them if you're looking to buy calls, but the swaps engine is really powerful. Let's say you like the apparel sector, you're stuck in Under Armour, or you're looking for a bullish apparel stock. Here are 3 apparel stocks with bullish ratings, and then it goes on to other leisure time stocks because you can only find 3. Apparel stocks are under pressure. The second thing you can do with the discovery engine is to replace a stock. Now, I'm using an example here, Maiden Holdings. Adam put this webinar and his people put it together with my wife Sandy, who's trading a very simple methodology using what we've taught you today. She bought Maiden Holdings, which is an insurance stock, back here in December on this oversold buy signal. The stock was about 1730. And then yesterday she looked at the chart and she saw that the stock was making a new high, but money flow was negative. Not blatantly negative, but it wasn't green, so she took her profit. She had been anticipating holding this for the longer term because insurance stocks are strong. But by following the discipline, she got lucky because Maiden Holdings dropped 8% on the opening and was down 10% on the day when I took this chart. The company reported their fourth quarter earnings, that's here on the news slice at the bottom of the chart, a week early and announced a big loss reserve. So by following the discipline, Sandy got lucky. She made a 10% gain in Maiden Holdings in 3 weeks, 3.5 weeks, and she avoided this downdraft, this 10% downdraft, taking it below her entry price. So what I did for this webinar is to enter the symbol MHLD into the discovery engine because Sandy likes the insurance stocks, and so do I. And it gave me stocks with a similarly bullish rating to Maiden Holdings. So 5 insurance stocks that she can use to replace that stock in her portfolio. Now, if she was looking for short candidates, there are also 5 insurance companies with bearish ratings. So the discovery engine works using the same similar technology to the way Spotify finds your music or Netflix finds your stocks or the way Amazon or Google do search. It's called a relevance-based discovery engine. We have a powerful matching engine that finds stocks similar to the symbol that you enter. So if you like a stock like JP Morgan or Citizens Financial, you can find stocks like that. Future versions of this, which we've built into Chaikin Analytics, will actually learn from your experience with the program and push you ideas based on your preferences. Right now, we launched the simple version and we're getting great feedback. It's the first time we featured this. So we're doing this for the Atom Mesh subscribers. Now, Chaikin Analytics has options play, a screener, earnings alerts, news, intraday charts, and now our new stock discovery engine. John Malden, who is not a trader, he's a macro guy with 1 million people who read his 2 free newsletters every week, has a big following from the institutions, learned about the Chaikin Power Gauge rating, had his analysts vet it, and it's become part of his daily routine the analysts who vet and evaluate potential investments for their newsletters. So a great endorsement from someone who's not a trader. Excuse me. So Chaikin Analytics is normally $1,950 for an annual subscription. As a webinar special to the Adam Mesh community, we're taking $200 off the price, reducing it to $1,750. Go to chaikinanalytics.com/mesh, and this offer is good until midnight Saturday, February 18th. Or you can call the number on the screen or email sales@chaikinanalytics.com. Now, along with your subscription, we give you small group tutorials to help you get set up and learn all the features of Chaikin and why they're important and how to use them. We do this every day at 2 o'clock. You'll get my colleague John Schlitz's daily morning insights before the opening, which tells you what the futures markets are doing, what pre-market price movement there is, what happened overseas, and gives you a stock of the day. And then you get my weekly market insights where, as you saw, we go out on a limb with something like the 5 semiconductors to sell. This week we had a buy recommendation on Progressive Corp, the insurance company. This all comes bundled with Chaikin Analytics. And as a special inducement, a fast action bonus to start you on the road to profits in 2017, if you subscribe by midnight tonight, we'll take an additional $100 off, reducing the cost of Chaikin Analytics to just $1,650 a year. As a famous options trader once said on a webinar like this, folks, if you can't make that back in your first trade, then you shouldn't be trading options. And I don't usually talk like that, but I'm quoting John Najarian, so I feel comfortable doing it. So if you subscribe by midnight tonight, the price is $1,650, chaikinanalytics.com/mesh. And as a final inducement for the first 10 people who subscribe tonight, you'll get a free one-on-one session with me. They typically last a half hour to 45 minutes. We'll do everything short of making specific recommendations, talking about how you trade, what's working for you, what isn't working for you, give you the benefit of my 50 years on Wall Street. So again, chaikinanalytics.com/mesh or call 877-697-6783 if you have any questions. With that, I'd like to thank Adam Mesh and his whole team, JJ,
Yeah, Mark,
Eric, and so forth.
Mark, I gotta tell you, and I see a lot of familiar names. Bob, I don't know if you're still here, and Kathy, I see a lot of names I know on here. That's a really good deal, especially go be one of the first 10, because you'll give that one-on-one session. That by itself, I didn't even know you did that, but I think for everyone out there, Damon's in. Yeah, someone's in already. I think for everyone out there, this is an awesome tool to just make your decision easier, more definitive. And I know for anything I do, this would help me with trade ideas also. This is definitely something I could use in my own trading. I mean, it's just a great way to get an edge. And at the end of the day, that's what separates one person from the herd, is that edge. Anything that's going to give you an edge, and this gives you that edge, and I think people would really benefit from it. And I hope a lot of the names that I know are able to get that one-on-one session with you, because that's awesome. I didn't know you were doing that either. So it's like, yeah, Bob said good presentation. Jim said, I have it for 4 years and I love it. It's the best stock analysis software. Damon said, already got it. Rob said, sounds fantastic. You've highlighted some wonderful successes. Way to go. So really high quality presentation, and you know, I'm psyched, and I would love to have you back because you do such a thorough job, and I think, you know, you set the bar very high, and we all appreciate that. Thank you very much.
Thank you, Adam. And Jim, give me a call. If you've been a subscriber for 4 years, I'd like to thank you and get your feedback and see how we can make the product better. So feel free to reach out to me by email or telephone, and I'll be happy to talk with you. And Adam, thanks again.
Oh, and David said, amazing. I've had it for 3 years. Dean said, I trade in Options Express. How does your platform interact with Options Express?
When we first launched our iPhone app, we were actually integrated into the Options Express order entry, but once they got bought by Schwab, that interface went away. So you find your options trades in Chaikin, and then you go to your online account and execute them through Options Express.
It's just such a good way to get an edge. It's for options and stocks. And Donna wants to know, do you have training or tutorials to teach people how to make the best use of the tools? So when they become a member, are there training videos? You know, let's say someone's not one of the first 10 right now, and I hope you are. Is there some way to learn how to use it better in there?
We have a big resource section with training videos, and every day at 2 o'clock, Michelle Greenblatt in our customer success department runs what we call an onboarding session. So 5 days a week, we have new subscribers, existing subscribers on there. She takes you through the product, how to use it, why these tools are important, and gets you up to speed. And in the event you're just totally lost, which is about 1 in 100 people, we actually offer one-on-one sessions in our customer success department. So we're with you 100% of the way. That's why we're 26 people and not just 2 people, because we know that for us to succeed, you've got to succeed.
And I know your time is short now, Mark, but I just got to say, Donna said, that's cool. Thanks for the answer. Andre asked if it works for ETFs. I can answer that because I saw the ETFs in there. I know it does. But does it work on futures too? Andre wants to know.
Well, you would do your analysis on the S&P. If you're trading stock index futures, you'd look at the TLT. If you're trading bond futures, you could look at GLD, the ETF, to get a take on whether you should be trading gold from the long or short side. But we don't have futures charts in here. Okay.
Charles said he's getting in. Jim provided you with his phone number. You could see that, I think, right?
Yep.
So he wrote in his phone number, which is good. And, you know, one thing I want everyone just to realize and appreciate also, and, you know, I just think this is a really good opportunity for y'all and something that I'm proud to introduce. Brad said he's getting in. What I would say is this. Some of the names you saw up there, I actually took a screenshot and I appreciate you putting me in the middle. But when you see some of the people that were giving these testimonials, which is Paulson and Soros, and you saw them on that page, those are as good as you get in terms of, I know everyone talks about Paulson having one bad year and one fund, but these are still people who have made billions and billions of dollars. They're the best investors in the world, and they're talking about this stuff. So that's why I took a screenshot, because you put me in the middle in between Soros and Paulson, which I appreciated.
Yeah, I know how to stroke my friends. So,
and you know, and when you're thinking about this, though, there's, you know, the hedge funds and stuff they're using. You know, I didn't discuss this with Mark, so but I'll say they're probably paying a lot more than the individual. This is $16.50 for the individuals to have access to this kind of information is really cool.
Yeah, it's an order of magnitude. JJ, could you please write down Jim's phone number? I actually can't see the
JJ,
chat window.
Can you write down Jim's phone number?
Email it to me. Thank you.
Oh, so let me read you a couple more then. This is Jim's number. I know Jim too. I have it, but I'll write it down right here. A couple more questions. If someone's not sure if their order went through, what's the best number for them to call?
877-697-6783.
877-697-6783.
We've got people.
697. It's on the bottom of the screen, actually.
Yeah, and we've got people, our internal sales forces here, and we'll be here for the next couple of hours. So Charles said he's getting in. I see a lot of the names I know, and I think you're all going to be happy and definitely keep me in the loop. So someone else asked, how much capital do you need? I always tell people that when you're getting prices, this is how I answer it. You know, college education costs $7,000 per semester for a class. So when you see some of the best minds in the industry offering something for $16.50 for the year, even if you're not ready to start trading for the first couple of months, the education is worth so much. But do you answer that question, Mark? How much? I get asked it a lot too. Like, how much capital do you need? Well,
I
you
know it
could,
depends on options or stocks.
yeah,
So
if you're trading
what do you think?
options, you could start with as little as 5,000 as long as you don't put too much in any one trade. I know when my wife Sandy started using the product 4 years ago, she took a small portion of her 401k plan, about 25% of it, divided it up into 10 lots of equal money. Now that could have been 50,000, it could have been 500,000, it could have been 10,000. I mean, you can buy 8 to 10 stocks in equal dollar amounts and get the benefit of this. But options traders, typically, if you have 5 to 10,000, that's sort of a minimum. You can take advantage of some of these vertical put spreads or vertical call spreads. The key is the discipline of equal dollar amounts. Don't overcommit to a stock because you fall in love with it, because typically the stock doesn't love you. And you just follow that discipline of good money management and good risk management. And you can start small. With any new system, I encourage people to start small, although we've got testimonials that I didn't use of people who made 400% in the first 2 weeks they were using the product, people who made 10 times the cost of the product in the first week. So people have done very well with the product. That's why we're still around 7 years after we started the company. And the fact that there are people on this webinar who have been subscribers for 4 years tells you a lot, because I think Adam would tell you that 4 years in our business means you're doing something right. If you're not thinking about the customer first, you don't keep a client for 4 years. So I'm proud of what my staff has accomplished and proud that we have partners like Adam Mesh who really believe in us.
Yeah, I mean, I grew up in retail, and customer always comes first, and that's why I take a lot of pride in seeing so many names that trust me to come on a webinar, and they know I don't make a lot of recommendations. Another name I know, Michael said, you can't tell if you got in, so you have that number to call Michael. Marvin said he's getting in later tonight. Marvin is a long-time subscriber of mine. I know Mark will take good care of you with this, and it will be great. It will help you, Marvin. I know what you like to look at. It will help you a lot with the stuff we're doing. Newell, hey, Newell. He said could not get the website with Mesh. So if you're having a problem, call 877-697-6783, that number on the bottom of the screen. Gerard said, Mark, do you do a lot of comparisons, stocks versus sectors, sectors versus ETFs versus SPY, etc.? Do you recommend pair trading as a tool to take advantage of Chaikin Analytics facility to do these types of comparisons?
I think pairs trading is fabulous, and the Discovery Engine is the best way I know to put on pairs trades. Here's this Maiden Holdings. Pick any of these insurance stocks after you look at the chart and go long, and go short the insurance stocks that have a bearish rating. It's the best way I know to put on a pairs trade. It's worked in the apparel sector for the last year, where you had Nike and Under Armour and Lululemon bearish, and you could find bullish apparel stocks like PVH, which is now neutral. And that is a great way to, if you use the power gauge rating and the technicals to drive your pairs trades, you've got the world at your feet. You could be shorting out of the money puts on stocks with a bullish rating and shorting out of the money calls on a bearish rating. It's an options strategy to implement a pairs strategy. So there are a lot of ways to slice and dice this, but I was involved with options pairs trading for a lot of years for institutional clients when I headed the options department at Tucker Anthony, and I'm telling you that these are the best tools. If these tools had been available in the early 80s, people would have been thrilled, because there was an awful lot of volatility back then.
Nell wanted to know, is this a standalone platform or tied to a charting program, i.e. Thinkorswim?
No, this is
both. No?
it's all standalone. It's browser based. We also have an iPad version, so if you're on vacation, if you're visiting your kids, your grandchildren, if you're skiing, you can take all this along with you and have it on an iPad. But right now we're not connected to any online brokerage platforms. The charting is all bundled in. We have this intraday chart, which is a tick chart that updates every minute, so that you don't have to constantly be looking at your online brokerage platform, Mel, in order to see what the stock's doing. We have the bar on here that's dynamically updating. These are all new features we've added in the last 6 months. So we're constantly adding to the system. That's really important.
Someone said, I have $10,000 in retirement. Should I do this? I mean, I always believe in starting small, get proof of concept. The best thing to do is, Mark, if you go back to that number on the bottom of the screen again so that they can call that. Same thing with Peter for your question. Barry, you said you called the number. They had to call you back. That makes sense. It was a really good offer. You know, Barry's one of mine too, Mark. So maybe if you could get
Barry,
a session also. I know it's only for the first 10, but I
no,
got to look out for people.
we actually fudge that a little. We've already had 10 subscriptions. Anybody who subscribes within the next hour will honor that commitment.
Wow. All right, Barry, you hear that? So yeah, if they're calling you back, make sure you answer that call. So because that coaching session by itself, I have no idea if I'm the first 10. It doesn't matter. I'm subscribed. Charles, you heard that now. Mark will do that. Nell said super presentation. What's up, Richard? Is the top 10 still open? There goes that. Richard, you're in. I'm in. Did it by calling. Bradford, hello. That's right. Will you have an Android-based platform? Was the question.
You'll be able to run on an Android tablet. We're coming out with a browser-based version that'll run on an Android tablet.
And listen, yeah, I see so many familiar names. I'm excited because I think this is a really good thing in the sense that it complements what I do, and you know, it's an edge. It's an edge, and you've all have seen over the last couple of years what we could do with a small edge and what a difference that makes. So within this next hour, take advantage of it. That coaching session, to say you got to work one-on-one with Marc Chaikin, I mean, that's pretty ridiculous. So I hope you all take advantage of that and get to experience that. That's pretty awesome. You know, Mark came to New York. I asked him, like, please let me know you're the next time in New York. I really want to meet with you. He came by our headquarters. We had a great meeting. Awesome, very impressive in person, and so excited that you did this, Mark, and hopefully you'll come back and do it again soon. And I know a lot of good people that I really care about that just signed up. So I know they're in good hands, and thank you.
Adam, thank you very much, and thank everybody for staying with us on the webinar. I hope we delivered as we promised, how to trade options like a pro. So I'm going to wish everybody a good evening. And Adam, thanks again. Enjoy Florida.
Thanks, Mark. Be good. Bye.